18 months ago, a Chinese startup that almost nobody outside of China had heard of did something no company had ever done before. In a single trading day, it wiped nearly $600 billion off the value of Nvidia, the most valuable chip company on the planet. That startup is called DeepSeek, and this week it came back with a move even bigger than the crash it caused. DeepSeek just closed its first ever outside funding round, $7.4 billion, at a valuation north of $50 billion. Here's why that number should stop you cold, and why the way they raised it might be the strangest deal in the history of AI. Let's rewind. Back in January of last year, DeepSeek released a model called R1. On paper, it went toe-to-toe with the best systems out of OpenAI and Google. But that wasn't the shock. The shock was the price tag. DeepSeek claimed it trained a frontier model for a tiny fraction of what the American giants were spending, millions, not billions, and it did it supposedly without the top-shelf Nvidia chips that U.S. export controls were trying to keep out of China. Wall Street did the math in real time and panicked. If you could build a world-class AI on cheap hardware, then the entire investment thesis behind the AI boom, spend more, buy more GPUs, win, suddenly looked shaky. Nvidia stock cratered. That single-day loss, nearly $600 billion, was the largest one-day wipeout in the history of the U.S. stock market. One free app from a startup most people couldn't name had rattled the most powerful company in tech. So that's the backstory. Now to the money. This new round values DeepSeek at more than $50 billion. Some reports put it closer to 59. That makes it, overnight, China's most valuable AI startup. And look at who wrote the checks. The round was led by Tencent, the social media and gaming titan, which put in around $1.5 billion. Right behind it, CATL, not a software company at all, but the world's biggest maker of electric vehicle batteries, with roughly $735 million. And then there's China's National AI Industry Investment Fund. That's state money. The Chinese government buying a direct seat at the table. But here's the catch, and it is a big one. Almost every outside investor in this round doesn't actually get to own a piece of DeepSeek the way you would expect. Instead, their money flows into a limited partnership controlled by DeepSeek's founder, a man named Liang Wenfeng. Those investors get no voting rights, no board seats, and they're locked in for 5 years. They share in the profits, but they have no say in how the company is run. The one exception, that state-backed fund, it gets voting rights and no lockup. Read that again. The only outside investor with real control is the Chinese government. And the founder. Liang isn't just running the company. He reportedly put in 20 billion yuan of his own money, roughly 40% of the entire raise. So he's the founder, the CEO, and the single biggest investor all at once. He kept almost total control while pulling in $7 billion from some of the most powerful institutions in China. That is an extraordinary amount of leverage for one person to hold. So why does any of this matter to you, watching from outside China? 3 reasons. First, this is the clearest signal yet that the AI race is no longer just OpenAI versus Google. It is the United States versus China, with national governments now writing the checks directly. When a state investment fund takes a voting seat in a frontier AI lab, this stops being a business story and becomes a geopolitics story. Second, follow the chips. Just weeks after this raise, reports surfaced that DeepSeek is designing its own AI chip, an inference chip aimed at the fastest-growing slice of the market. Think about what that means. DeepSeek's whole legend was built on doing more with less Nvidia hardware. Now it wants to cut out Nvidia and China's own Huawei entirely. When that news broke, Nvidia shares slipped again. The company that once erased $600 billion of Nvidia's value with software now wants to come after its hardware too. And third, the scale gap. For all the drama, DeepSeek at $50 billion is still tiny next to its American rivals. Anthropic has raised at valuations in the hundreds of billions. OpenAI filed to go public at $850 billion. So the real question isn't whether DeepSeek is winning, it's whether a leaner, cheaper, state-backed challenger can keep punching this far above its weight, and whether the American giant's billions are a moat or just a bigger target painted on their backs. Here's the bottom line. DeepSeek proved you could shake the entire AI market with a cheap model and a free app. Now it has $7.4 billion, a $50 billion valuation, the backing of the Chinese state, and its sights set on Nvidia's core business. The startup that caused the crash is now armed for the fight. So I want to know what you think. Is DeepSeek the most dangerous company in AI right now, or is a $50 billion valuation with no voting rights a warning sign, not a green light? Drop your take in the comments. And if you want the biggest moves in AI and money broken down like this, subscribe to Mind Blitz. I'll see you in the next one.